Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The rubber is really hitting the road for Fisker, and this is going to be one of the most interesting electric vehicle companies to watch over the next couple of years because it's taking a little bit different business model than a lot of its competitors. It's not building its own manufacturing plants. It's actually outsourcing most of the manufacturing, taking on design and then delivery, even outsourcing a lot of the service that happens for vehicles. So is this going to be a successful model? Well, one of the things you have to do is ramp up production and actually get product in customers' hands. We took a few steps in the right direction over the last few weeks, so I want to dig into a few of those news items. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and check out my newsletter, Asymmetric Investing, in the show notes. I'll highlight a couple of things that Fisker announced recently. This came out on June 20. Fisker said it has delivered its first 22 Fisker Ocean SUVs to customers in the US. They have a 360-mile range, and this follows deliveries in Europe. So there are 4 more vehicles that have been produced early in July. Fisker said that for the second quarter, they produced 1,022 Fisker Ocean SUVs, a little bit lower than they expected, but did say that by the end of June, they were looking at about 80 units per day and expected to pass 1,400 total produced in early July. So these are relatively small numbers for automakers, but seems to be moving in the right direction. The challenge for all of these EV companies is how do you get to the point where you can ramp up production and generate positive cash flow? One thing we need to think about is always how much cash does the company have? To that end, management announced a $340 million convertible note offering that could be increased to $680 million. These are 0% senior unsecured convertible notes due in 2025. So fairly short duration for bonds, but not going to be pulling cash flow from the business because it's a 0% unsecured note. So I think that's a notable piece of this. The conversion for the notes is that they convert to stock for an initial conversion price of $7.80 per share. And that can be done at any time. And if we go to the stock price here, you can see that's a little bit higher than where the stock is trading. This is pretty typical for convertible notes. You set your convert a little bit higher than where the stock is at, especially if you're going to have a 0% interest rate. So keep in mind that if Fisker is successful, those bonds are going to actually be dilutive. It's going to be like the company did a stock offering at $7.80 per share. That's going to be the impact. As a result, they're not going to have debt of the same level. So just something to keep in mind because that's a pretty big share offering when you consider that this is a $2.1 billion company. Now, one of the things that I'm going to be keeping an eye on is what does demand look like for this company and for electric vehicles across the board. One of the things I think Fisker has done really well is they should theoretically have a much lower operating cost base because they're not operating their own manufacturing plants. And they actually have a really attractive price point. $37,500 is where their vehicles start. There is obviously a much higher price point, almost $70,000 for the Fisker Ocean Extreme, and the Ultra falls between those two. But given the range, given the design, given the price point, I think this is a pretty attractive value proposition for customers. The question is going to be, are they going to be able to compete with the Teslas, the Volkswagens, all of the other companies that are trying to make relatively low-priced electric vehicles? That's a challenge for every company, but I think at least Fisker has the right price point, the right design, some of the right design, and some of the right elements like range that are really going to work into their advantage. So a couple of things to top this off. Keep an eye when results are released in early August on what are operating costs. These are going to be the ongoing costs. We should see much more revenue and more gross margin from Fisker, but these operating costs need to be contained. So that's going to be something that I'm going to be looking at. Are we looking at a $500 million or so operating cost run rate? That would be a pretty good level for a company like this if they can ramp up production. The other thing is, what does the balance sheet look like? At the end of last quarter, over $650 million worth of cash. Now, the recent cash raise should increase that even further. That should give the company hopefully over 2 years of operating runway to ramp up production, get more vehicles in customers' hands, make sure that you have demand and margins that are going to be sustainable long term. That's a pretty good runway for a company, but in the auto industry, that doesn't last forever. So there's still a lot of questions. Fisker is one of the few purely EV companies that I'm really interested in long term. I don't own shares of this stock, but given their business model of outsourcing a lot of the pieces that are typically brought in-house, should theoretically lower their risks and improve their upside. I think that's really the bullish case for the company now. Demand has got to be there. And that has been the question that we've had for a lot of these companies. Can they price vehicles where they're actually able to generate a 15, 20, 25% gross margin, and are they able to make as many vehicles as they can and actually get them in customers' hands, sell them? That hasn't necessarily been the case with a lot of companies. We've seen backlog fall at a lot of the EV manufacturers. We've seen Tesla have to reduce prices to move vehicles through its system as it ramps up production at about 50% a year. So there's a lot of question marks for EV companies, and not everybody's going to survive. But I think the product, the features, and the price point put Fisker in a really interesting place. And their business model is a little bit different than anybody else. So not taking as much risk on the balance sheet as a lot of other companies. Has at least a fighting chance to be a good brand in the EV space. But what do you think? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.